Good afternoon, Essentials Room. So, what is this about today? About historical tendencies. Number one, there's certain historical tendencies to believe, then there's certain ones not to. So, the first thing I want to show you is which one not to believe. And that is the thing that, oh, well, March, usually we go down the end of the month. The idea is that if you have rebalancing, that can change things. So I wouldn't worry about that one. So you got to put this into sort of the logic category. The other thing is about the Santa Claus rally. So I thought I'd go over that just so you know what we're talking about. And what you'll see in here is that markets do indeed go up around November 1st. Not Christmas. I warned you last year, and I know a number of sites had lost money not listening to me. What are we talking about? We're talking about the resumption of buybacks. Companies voluntarily don't buy back stock 5 weeks prior to earnings. Well, let's put it this way, a preponderance of the SPX doesn't. So what happens? I usually do it by November 2nd. That's usually when Apple's its earnings, then they can resume their buyback. And you'll see so many sell-offs stop November 2nd. Isn't that wild? That's not a one-off. How about the year before? Well, guess what? November 2nd. Yeah, right there. So historically, the beginning of November is strong because companies can start buying back stock. Also, you get a little slower at the time for the holiday season, so companies can prop up their stock and it helps. That works pretty darn well. The other thing, though, is this Santa Claus rally is totally not true, and I'll show you what we're talking about. And I can go back to a ton of them. But you'll see that a lot of times the market, well, just go back and look. And look here, go to December 17th. A lot of times it goes down December 17th. A lot of times it goes down December 27th, especially December 27th. So can't impress that enough. So 5 weeks prior to earnings, companies voluntarily don't buy back stock. That's what they do. So getting back to it, though. So what else are we watching? Well, you can go back a number of years and I'll show you. So we're going to go back with the historical tendencies and we're going to go to the SPX, non-24 hour. And we're going to go into here. And just because companies voluntarily don't buy back stock does not mean markets go down. That's another thing that a lot of people screw up. What it means is bad news is more likely to take the markets down, or an individual bad chart is more likely to work. That's all it means. Doesn't mean markets are going down whatsoever. Now, getting back to it, though, let's go into here. We're going to go to 2020. Now, that's a little rough because of the whole thing with COVID. But what did the SPX do? Yep, it went down. Look at that. Went down on December 28th. How about the next year? December 27th. It didn't work that time. That's what I'm telling you. It's not perfect. But you did have a sell-off prior to Christmas. Look at that. So anybody that thinks, oh, you rally into Christmas. Well, that's not necessarily true. Look what happened. But beginning of November worked great. That is 2021. How about the next year, 2022? What did the market do around Christmas? Went down. That's what I'm telling you. But it did go up November 1st. Isn't that weird? And then it was choppy. So anybody tells you, oh, Santa Claus rally, I think they're full of it. So sorry, but I've been doing it a long time and I just watch it. I'm watching the price action. How about the year before? That year? Well, it went up. That's what I'm telling you. It's just not that you blindly buy or you blindly sell, but November 1st does work. So if you're playing the short side, you don't do it in November. Oh, that's one thing very important. Now, when it comes to everything else in here, is what about other historical tendencies? Well, I like looking at Jeff Hirsch of his stuff. He does the Stock Traders Almanac. He works really hard. He's not a promoter. And there are other people that have copied him. Him and his dad his dad did this a long time. I really respect their work. I also respect their work because in the money show 2 years ago, when I was able to go, he signed his book that I bought from him to my favorite short seller. So that was pretty cool. So, and I don't always short, by the way. We make money on the long side too. We make whatever the charts tell us. It just seems there's so many that don't know how to play it on the short side. That's all. Not a perma bear whatsoever. But I like going to Jeffrey Hirsch. When you go into him, what's really cool is this one right here is one reason we weren't bearish. What's it say? 7 weeks into Trump 2.0, the S&P tumbled to fourth worst post inaugural. I wonder who asked him to post that. Me. Thanks for posting. Thanks for asking. This is why we weren't that bearish. Presidents do watch the stock market performance. That's the fourth worst since 1945. You don't think that Trump softened his stance on tariffs? Yeah, I called that back when we were down 8%. You just knew that was going to happen. Now, I don't know. And we'll try to go over that. But historical tendencies, as long as you look at them in certain ways, really can help. So let's go to another one. We're going to go to this. I watched more people lose their butt by they think blindly that a historical tendency works. So that's the Holy Grail syndrome. So think there's one thing and that's how you're going to make your rent money. That's not the way it works. So this is the next thing to watch, though. Go into here. This is triple witching. So many saying, oh, the markets are going to go crazy, this and that on triple witching day. The S&P was up 3 points on Friday. What's the historical tendency on the quarterly expirations in 1983? That's when the future at the SPX option started. What is the average move on option expiration day? So how many looked at Twitter that said on triple witching, there's going to be a lot of volatility? I know you heard that. Look at the average move. 0.8 and 0.3. Yeah, it was up like 0.3 on Friday. It was amazing. Option expiration week, now up 64% of the time. We've been in a bull market since 1982. It should be up 64% of the time. Oh, the week after, in an overall long-term secular bull market, up 35% of the time. That's an eye-opener for you, isn't it? That's the week after March expiration. It's down a lot. Now, there is something you have to throw in here. And this is another thing the Twitter sphere doesn't seem to do right. Let me show you what we're talking about. Rebalance. There's 3 types of rebalance, at least 3. One of them is the third front. Triple witching is when the S&P rebalances their indexes according to capitalization and whatever they do. They do it on that Friday at triple witching. These days, with everything decimals and with all these off-floor trading houses, it's a very muted reaction. When it used to be just a New York Stock Exchange, you got some wild moves where a stock would be at 100 and the last trade's 120. You don't get that stuff anymore. That's why the moves are so muted. But getting back to it, there's 3 types of rebalancing that I watch. One of them is the S&P rebalance. The other 2 are a month end and a quarter end rebalance. 50-50 funds or 60-40. If they're long 50% stock, 50% bonds, and in the quarter, the stock market goes straight down, but the bond market goes straight up, well, they're loaded too much in bonds. Now, the bond market is huge, and it has different maturities. It doesn't move the same as the stock market. But the key is that a week ago, everybody was talking about there was going to be a massive buy imbalance at the end of the month. And the reason I'm bringing this up is another thing of a number of people saying, well, you go up the last day of March or you go down. You got to look, or like I said, with quarterly option expiration. If you've gone down the week before, a lot of times you go up the next week. So not always. And it's actually the quarter, not the week. So if the bond market went straight up and the stock market went straight down, then that week is going to be a tendency to go up. But I want to show you where a lot are getting this wrong. Here's the S&P futures. I can take the actual cash. In the S&P futures for 2025, I mean the index, started the year right here, right there. That's 5902. Now it's 5750. It's 2% lower. That's it. How about the bond market? The bond market started here, 114.10. It's 116.20. It's 2 points higher. This is not as much a disparity, obviously, as it was last week. Last week, this was 250 points lower. The bond market was all the way up here. But all these people on Twitter today were talking about there's $100 billion to buy at the end of the month. Well, there isn't. It's not going to be because it's already been rebalanced. So there isn't that much, but that can skew the results of the option expiration performance the week after. So if the bonds are way up and the stock market is way down, then the probability is this is going to be up the next week and vice versa. So wanted to let you know on how that works. And that's what I'm seeing. So at the moment, what are we seeing? Well, guess what? Yeah, well, I showed you if you're in the central room and somebody asked me about Goldman Sachs, and I told you that Goldman Sachs, I would look to get out of your long. Well, it's only gone down 7 points. So just you got to respect the trend line. I showed this live and said if JP Morgan undercut its 9 EMA, then I'd look to sell half your Goldman Sachs. Well, you just saved yourself 5 points if you listen to me. So the point in here, though, is the overall market, whether you like it or not, is still in a downtrend. There's a big difference between when a stock rallies in an uptrend or sells off in an uptrend or sells off in a rallies or sells off in a downtrend. So how do I determine that? And also, if you're in an uptrend or downtrend, the historical tendencies aren't going to work as well. But there is another thing in here, and I'll go over that also. So number one, what is my determination of a downtrend? Well, at the minimum, it's the 50, being under the 50 moving average. The other one is having the 20 sloping down. So I know there are a number of sites that talk about like Golden Cross or Death Cross, and they talk about the 50 and the 200. I like looking at the 20 and the 50. All I'm doing in here is determining if it's an uptrend or downtrend. That's it. 50 still going down. How about the SPX? The 50 is sloping down. So to me, this is a rally in a downtrend. You're just not sure when it's going to end. So that's what I see. It's a rally in a downtrend. But Chart Patterns Master, if you're in here, you're up on the trade I showed. You're already up, believe it or not. So, which is pretty cool that you're up a little, not a lot, but you're up. All right. So getting back to it in here, though, I want you to see something else. You were asking about the buyback blackout. And what you're going to see is a lot of companies, number one, they step up their buybacks if the markets are going down because the stock's cheaper. They also have a habit of backloading their buybacks up to the day of the buyback blackout. That's what I do. I'd be buying a lot more stock right near when you can't buy it back. So that's why this has started to happen, because the big window of when a lot of companies don't buy back stock right here is coming up. So you're going to get a lot of companies backloading their buybacks. So that's why at this time of year, a lot of times the markets rally. You'll see March rally back here, right in here. And then the buyback blackout started and you went down. So like I said, buyback blackout does not mean you're going down. What it means is if you see a bearish pattern like there, it's more likely to work because the companies aren't able to support their stock. So historical tendencies, just do this. I'm going to show you on here because I think it's pretty cool. I'm going to just go back all the way back here, and I'm going to show you this. We're going to go 35 days I go from, let's say, November 2nd and JP Morgan, their earnings around April 14th. So I usually take about April 14th to November 2nd. April 14th to May 2nd, even though that's a little arbitrary. But I've seen it work. So all you do in here is you take here. Just take here. Take May 2nd, right there, and subtract and just have that zone about April 14th. There, in that zone, somewhere in there. Now, the JP Morgans of the world, you can even make it that way, because JP Morgan's around April 14th. Take that buyback blackout 5 weeks prior. So that area. And you're going to see if you go and move this over to every one of these, it doesn't mean you're going down, but what it means is a bearish pattern is more likely to work. That's all it means. No more, no less. So go back to here. When were Apple's earnings? Go back to in here. So let's go back. Apple, when are their earnings? Yep, right here, August 2nd. So that window. So go back to the S&P. Go back to here. That window, right? August 2nd to about here. Just like now. Go back, and what you're going to see is the bearish pattern was more likely to work because they couldn't buy back stock. So these historical tendencies, not a lot of sites show this. Or if they do, they just say, oh, you're going down. No, it means that a bearish pattern is more likely to work. Bearish pattern more likely to work because of lack of buybacks. So that's how we do it. Oh, how about now? Well, you're getting near the buyback blackout, but they're front loading it. And I think that's one reason the markets have gone up. If you take the preponderance, so you take, let's say, the early JP Morgan. So that's April, let's say, well, let's show you. There, April 11th. So you just take April 11th. Go back from April 11th. Go back 35 days, 5 weeks. That's right there. As you see, the second it was a buyback blackout, it went straight down. Well, the whole market did, but it was less likely to go up is the point. So a bearish pattern was more likely to work. So 35 days, where does that get you? About March 6th. The problem is most of the stocks have earnings in here, not early. That's why I moved it over. So that's why this rally, you're coming real close to buyback blackout of a lot of S&P stocks. And that's why, in my opinion, once you work off the overbought, you got overbought, if you get up to this area and you get rejected from either the trend line or the 50, you're more likely to go down on any kind of bad news or bad chart because the companies won't be able to prop it up. So that's how that works. So one of the historical things I use is definitely the buyback blackout. The other one is November 1st, which also corresponds to the resumption of buybacks in a historically strong time. So those are some cool historical tendencies. Now there's another one, and this is one a lot of people ask about, and I'll show you. So what are we talking about? We're talking about the beginning of the month jumper. So what is a beginning of the month jumper? And the buyback blackout is 35 days prior to earnings, and it's voluntary, not mandatory. But the last 10 minutes of every day is mandatory. That's why a lot of times you see stocks sell off the last 10 minutes. But getting back to this, beginning of the month jumper. A lot of theories are that the markets go up the first day of the month because that's when mutual funds deploy their money. So it's easy to go through it. It's fun to go through it. A lot of times we do that to see. So let's do it. So obviously a bear market, it's not going to work as well, but let's just show you. So we're going to go to here. I'm just going to show you a number of them. So let's go to January 2nd, beginning of the year. Did the markets go up? This is January 2nd, 2024. It's pre-buffering. Give it a second. And the reason I'm not just showing it on a chart, it's hard with the bars to see it. So I'll just show you. Didn't work. Look at that. Down 27. All right, let's take the month before. I love doing this kind of stuff because I like research and I found that research works. All right, December 1st, beginning of the month jumper. Did it work? Remember, that's a historically strong time of year. It's pre-buffering. And you can just go back and there it is, up 26. November 1st. Well, we already know about November 1st because the beginning of the year, beginning of November usually goes up. But I'll tell you right now, when it comes to that, look at that, up 44, beginning of the month. And like I said, November. It's amazing. So the beginning of the month, I'm usually not coming in short. Doesn't mean I have to buy, but I'm not coming in short, especially in November. Just want you to know that, especially then. So if you go back and just go way back, just see how many times it's worked. And you'll see the odds of you shorting on the last day of October, you're going to lose money. The odds are. Now, I'm not saying every time. Yeah, there it went down. I bet the next day it was up because that's after Apple's earnings. Usually that's the green light to start buying back stock. Let's see, pre-buffering. Nope, down 96. That one didn't work. So like I said, combine it with charts. I can't impress enough. You got to combine it with charts. That's what I'm saying. You don't have to buy into it, but I wouldn't short into it. But you still have to combine it with charts. So as you say, overall, it goes up. But that doesn't mean like a holy grail that you buy and you're going to make money. Now, my favorite one, and a lot of you know I poo-poo this. If you're in a bull market, then theoretically, every day is going to be than the day before. One of the things you see all the time, how many have heard the Pitbull low? That on the Thursday prior to expiration Friday, so not that Friday, the week before, the markets have a tendency to bottom. Well, heck, if you're in a bull market, the market should have a tendency to bottom. But if you're in a bear market, it's not going to work. If you go back, and I'm telling you, I've been doing it as long as Marty Schwartz, who I know and lived in Florida. When I lived in Florida, I've known him all that time and it works, but it's still not a holy grail. So he's the one that developed it. So if you go back to this and go to November 11th, and you go to 2022, you'll see it. So like I said, the odds are the markets go up the first of the year. The odds with a Pitbull low, I've seen that at most 50-50. 50-50. If you're in a bull market, of course it's going to work because every day theoretically is higher than the week before. Go into here. Heck yeah, I bet the Pitbull low didn't work because you were in a downtrend. So you could just go into here and look. There. That was a Pitbull low. How did that work? Or this one in September. Bad. How about in October? Right there. Bad. Nothing. It was actually right there. The key is determining the trend and not thinking there's a holy grail. There's not a holy grail in this business. So the charts work better. And I don't use the Pitbull low at all. The beginning of the month, sure. I at least I have my eye out on it. The beginning of November, sure. I'm looking. In fact, the stocks I look at the beginning of November, not the apples of the world, it's the schlock of the world. The sound hounds. Go and check out this, not here. Go and check out overall the performance of a lot of tiny stocks. You can do a micro cap index if you want. But you're going to see they start going up in November into like February. I've seen this cycle, and my friends and I have done this and screwed up 8 million times of we buy in November, and then we're like, they're going to just keep going forever. You heard that this year. When they went up in November, everybody said it was a new bull market, and then they got crushed in February and March. But I've just seen this on a lot of these stocks. They have a habit of going up in November and then crapping out by February. Like that. Look at that. Went from 6 to 24 to 10. That area is your sweet spot. It worked with BBAI. These small stocks love November. So if you're playing small stocks, I wouldn't look at them now until November. It's so weird. They're going to have their moments, but look at this, even the year before. It's just amazing. They might have, there's your November. It's just amazing the cyclicality of these. So the big ones I use, trading the overall indexes or small stocks to the long side starting in November. The beginning of the month, I back away from short ideas, but I look for bearish patterns when you have buyback blackouts because they're more likely to work. Doesn't mean blindly working, but they're more likely to work. And that's how I do the historical tendencies. What do you do now? Well, here's another one for you. I'll give you one more. How about prior to an election? What happens prior to an election? It depends. If it's somebody business friendly like Reagan or Trump, it has a habit of rallying on the day of the election, then giving back the rally later. Like I showed here. Yep, showed that. Gave it all back. Same in 1980 with Reaganomics. If it's a Democrat, it's variable. Just combine it with charts. That's what I do.